Hey guys, it's Gerald here. So if you're looking to buy a property right now, I have some really interesting data and insights that you do not want to miss. So today, I'll be talking about how you can find bargains, some market trends that I've been seeing in the residential market, and how do you protect yourself during this uncertain time with a high interest rate and slowing property market. As always, I'm forecasting based on the data and my personal experience, so I can be wrong because nobody can predict what's going to happen in the upcoming years. So what's happening on the ground right now, right, is that property sales are slowing down, rental market is slowing down quite significantly. The data apparently also shows the same trend. In fact, in February 2023, it slowed down earlier this year, but February is an exception, because it's Chinese New Year, and when it's CNY, literally half the population is not free for buyers to view. They are not free to go and buy homes, and agents themselves are also not free. And very quickly it picked up, and from my experience during those times, property were still moving very fast. But right now, I notice it is a lot slower, like 3x slower. Not just me, but for people around me as well. And this is not just for myself, but my agent friends as well. But that's not all. I have other data points that signals that the property market is slowing down right now. So first up is the number of unsold stock. So in terms of new launch units, right, we can see that new launch stock is slowly increasing. But in the second half of 2023, we have 8,000 more projects. And from my on-the-ground experience, I know that properties are moving a lot slower. So I can foresee that very likely a lot of this stock would probably be added to the unsold inventory. So we can expect a relatively steep rise of unsold inventory from the second half of this year. The second data point is that more developer properties are being discounted right now. Remember earlier this year, we had a few popular launches like Grand Dunman, which had like 50% sold on launch. I even did a collab with Josh on this. And there's also Pine Tree Hill, which is an interesting, tranquil kind of place. 38% sold on launch weekend, which is fabulous. Like more than half sold in one weekend. That's insane, right? But what's interesting is that just a month later, when we look at the data, Grand Dunman is being sold lower than launch weekend. And even some units were below estimated break-even price. And same goes for Pine Tree Hill. With the exact same data, price drop sold at close to break-even. And if I check today, they're still being sold at close to launch prices or break-even prices. Then the question becomes, why would these popular launches get sold at close to break-even prices, right? Two reasons. Number one, developer is selling those unattractive units. That's possible. Number two is that the market is slowing. So my opinion is that I think market is slowing. That's why they are discounting. And I'll give you more data points in a little bit. The third data point is that the resale and new launch price gap have narrowed. So typically, new launch units, which are brand new, should be priced higher than old units, because they're new, right? So for the subsequent charts that I show you, because no two properties are alike, so it's not an apples to apples comparison. So we can't say, which should absolutely be priced higher than the other based on just age alone. But I want you to focus on two facts. Number one is the dropping sales volume, and number two is the narrowing price gap. So the trend, it's undisputed, right? So in terms of overall market, the price gap between brand new buildings and resale buildings have dropped from 22% to 5%. So the last time we saw a similar trend where the price gap narrowed was during a recession in Singapore, where we had a COVID shutdown in 2021. So typically in a healthy market, the price gap is much wider. For example, Sengkang Grand is 36% more than Jewel in 2020, but right now the price gap have shrunk to like 20 to 25%. Number two, Amber Park and Seaview versus the Esta, the price gap was 40 to 42%. Now that's like 10%. Again, 28% gap between Skywoods and Dairy Farm residences. Point being is that there are bargain opportunities showing up right now. So relatively speaking, brand new flats are undervalued compared to resale flats right now. And if we think what are the possible outcomes, right? Of course, if the market spikes, obviously buying cheap, you would earn more money compared to buying more expensive. For example, Florence Residences, which was a less popular launch with only 3% sold on launch weekend. People bought it cheap and they made like 40% gain in 3 years, and Park Esta is like 300 to 400K profits in 3 to 4 years. But I think a lot of us are very worried right now is what if the market crashes? So obviously, if the market crash, if you buy a new unit, you should be safer because number one, it's cheaper Number 2, it's newer. Compared to resale units, obviously, it should drop less, assuming it reverts to the mean of like 20 to 30% price gap, right? Hey, that's already protection right there. And you know, the famous investor Warren Buffett calls this the margin of safety. So if we look at properties that are currently available in the market right now, in terms of freehold units, we have Continuum. And let's say we compare to another freehold unit nearby, Amber Park, right? Of course, one can argue that Amber Park has a better location, but Amber Park, which is older, is being sold 6% higher than Continuum right now. Let's take another case study, for example, Tembusu Grand and Seaside Residences. So again, the older unit, Seaside Residences, is being sold 1% higher than Tembusu Grand. But this time around, can you compare which location is better, Katong or the Sea View? It's a lot more debatable right now. Other opportunities includes Botany, which is sold 8% cheaper than Dairy Farm Residences, which is relatively narrow compared to the usual price gap. So when I try to research onto why such an opportunity even exists in the market, right, I have two reasons why. Number 1 is that resale owners are holding up the price because resale owners just enjoyed a relatively good bull run. So there is no reason to think that, hey, the market has shifted, it's time to bring your price down. There is no urgency to sell because a lot of them are still enjoying their fixed low interest rate mortgage, and if they sell now, they have a huge opportunity cost where they have to buy units at a high interest rate in this environment. So no reason to sell now. So therefore, what we see in the market is that it takes much longer to sell during this time. The second reason is that developers are squeezed quite badly. There's a lot more new supply coming up in the market. There is a lot more unsold inventory. Because developers have a lot of units, they are a lot more price sensitive. They also have a lot more stakeholders that need to answer to. For example, property developers, they do get a preferential loan from the banks, but one of the criteria is that they need to sell 30% of the unit within a certain amount of time. So if they don't sell those, they need to price down. But of course, if they sell cheap, they also cannot answer to their shareholders. So it's a catch-22. Overall, I think this opportunity will revert to the mean and the price would balance itself out again. So either the market crash and owners start to sell cheaper, or the reverse happen. The bull market starts to come again, the unsold inventory clears faster, and developers will start to price at a premium and raise prices again. So I would love to know what you think of this opportunity. If you have other data points that refutes my data, please leave them in the comment section below, or join my WhatsApp group where we can have a discussion on what are current bargains in the market. If you want to tap on this opportunity right now and look at the best units available, you can drop me a WhatsApp at this number below and I can show you what I have and found. And in my upcoming video, I'll talk about how homeowners can arbitrage and save on interest, which is very significant during this high interest rate environment. So do subscribe to stay tuned, or check out what YouTube recommends you over here and here. And I will see you in the next video. Take care and stay safe, everyone.